cash payment is made in a day to a person exceeding rupees 10,000, then whatever cash payment made will not be taken into consideration in consideration for the value of purchase. What I mean to say is, this is the purchase. Okay. Assume that what is the journal entry you are going to pass when the asset is purchased? When the asset is purchased, what is the journal entry is passed? In this case, machinery account debit to bank to cash. Okay. If the value of the machine is how much here? 3 lakhs. If you pay any cash while purchasing the asset, if it exceeds 10,000, whatever the amount of cash you have paid will not form part of your cost of the asset. Assume you have paid 20,000 as cash and balance 2,80,000 through specified modes. We say specified modes means any electronic modes or account pay check or bank draft, debit card, credit card, NEFT, BIM, net banking, RTGS, Google Pay, Phone Pay, BIM Pay, Phone Pay, everything is allowed. That is called as specified modes. If you pay in cash, or cross check or cash, then to that extent you will not get depreciation on the same. That means you need not have to take it into consideration that portion of the value of the asset which has been paid in cash. Understood? This one, any payment made to any person in a day which exceeds 10,000, that means up to 10,000 you can pay it in cash, no harm. This provision is applicable to more cases in the sense, for many sections this one will be there. Okay, this provision deals with section 40A3. Deals with cash payment exceeding 10,000 in a day to a person. You can pay today 10,000, tomorrow 10,000, day after tomorrow 10,000, like that you can pay. You can pay entire thing in cash only. 10,000 in 30 days. But in a day, it should not exceed 10,000 per person. You can pay 1,000 person 10,000 rupees per day. But for single person, you should not make more than 10,000 cash payment. Okay, if that be the case, whatever the cash payment you have made will not form part of your cost of the asset. That means you need to exclude that portion of the cash payment. Only the balance you have to take it as addition. Understood?
Yes, sir.
What is the limit?
10,000.
10,000. Up to 10,000 you can make cash payment. Okay? Remember this. What is not included? Cash or cross check. If you make the payment in these two forms, you have to deduct from addition. I mean, you should not include that value as part of your cost of the asset. Okay? This one, I will be keep asking 10,000 or more, specified more. How much? If I do not mention the amount, how much I will be keep asking, you need to tell. It will be keep coming in many cases. Okay, that is what they have explained here. When an assessee incur any expenditure for acquisition of depreciable asset in respect of which a payment or aggregate of payment to a person in a day otherwise than by an account payee check. See, account payee check, draft or use of ECS through a bank account or such other electronic mode as may be prescribed exceeds 10,000. Such payment shall not be eligible for normal or additional depreciation. Also, such payment will be ignored for the purpose of computation of actual cost of such asset. Actual cost of such asset means here you are not supposed to take it into account. That's what they have mentioned. Understood?
Yes, sir.
Okay. This one. This is previous year. 1/4/2022 to 31/3/2023 is our previous year. Assume your I will take the example of company so that it becomes easy to understand. Okay, I don't think the if I take the other one is also as good as the company only, but company normally these things can be happening. Okay, assume your X limited. Okay, and you have some assets, opening value, and you have purchased some assets. This is opening, this is purchases. Okay, during the year, after some time, you sell the business or you get amalgamated with another company. That company may be Y Limited. You sell your business to Y Limited or you can amalgamate with Y Limited and XY Limited will be formed. Work struck. The date of amalgamation. Date of amalgamation, just for our reference, I will take 1st December 22. X Limited will be having some asset from 1/4/22 to 1st December 22. Some asset, assume that 1,000 rupees, 10,000 rupees. Opening, addition made 1st July, assume 2,000 rupees. This is of X Limited addition. Opening 10,000 value, addition made on 1st July 2,000 value. Total asset you have 12,000 from 1st July 22 to 1st July 22 to 1st December 22. It got amalgamated with Y Limited as on 1st December 22. Yeah. Addition to Y Limited asset on 12th Jan, assume rupees 5,000. Are you getting the points right?
Yes, sir.
One company, another company, both company will merge and becomes XY Limited. From when? XY Limited will become from when? From 1st December. Okay. This one is XY Limited. XY Limited addition 12th January 5,000. Now the question arises. First thing, how to calculate depreciation? What the question? How to calculate the depreciation of X Limited? Okay, this is getting merged with XY Limited. X Limited is getting merged with XY Limited. The question comes, how to calculate the depreciation of X Limited? You have to calculate the depreciation same way for the full year. Full year in the sense from 1st April to 31st March. Full year calculate the depreciation. After calculating the depreciation, whatever the depreciation you calculate, you have to divide this depreciation depending on the number of days which has been used by earlier company before amalgamation, that is X Limited. After amalgamation, which company is using, on that number of days you have to allocate that to other company. I mean to say the amalgamated company. Understood? Depending on the number of days, you have to allocate the depreciation between the two companies. Understood? Yes or no? X company is there. X company's opening balance is this much. Addition made this much. You have to calculate the depreciation according to this. The way you calculated on the assumption that X Limited is still existing. Technically, it is not existing on the assumption that X Limited is existing. You have to calculate depreciation the same way. After calculating the depreciation, whatever the depreciation amount you got, that has to be divided between X Limited and XY Limited based on the number of days. Tell me, in this case, X Limited how many days? Till 30th November, how many days? April 30, May 31, June 30, July 31, August 31, September 30, October 31, November 30. How many days? 244 days relates to X Limited. Balance 121 days, right? Out of 365 means 121 days. Correct?
Yes, sir.
121 days how? December 31, January 31, February 28, March 31. How much it comes? 121 days. This is X Limited, XY Limited. How to allocate depreciation of this? Total depreciation? Between these two, total is 52,500. This total. This 52,500 will be allocated based on the number of days. How much is this for X Limited? 52,500 divided by 365 multiplied by 244. 35,095 will come. And for this 17,000 comes. Total should be 52,500. Understood? Based on the number of days which company owns the asset, on that basis you need to allocate the depreciation. Understood?
Yes.
Okay. This is about X Limited. Right? Now, what about this addition? To which company it should go? 5,000. This 5,000 addition. Should it be allocated to X Limited or only XY Limited? Should it be allocated to
Only XY Limited.
why?
Because they're amalgamated as on that date.
See,
It has been acquired after the amalgamation.
after the amalgamation it has been acquired. Hence, no share will go to another company. Okay, X Limited is merging with XY. Okay, on this way, they have given this provision. Depreciation is allowable in the hands of the predecessor and the successor in case of succession of a firm proprietary concern by a company predecessor, like that. In case of amalgamation or demerger, and that shall not exceed the depreciation that would have been allowed if the succession, demerger, amalgamation had not taken place. That means it should not exceed the depreciation had the amalgamation or demerger, merger had not taken place. In that way, you have to calculate the depreciation. That means it should not exceed. Had the amalgamation not taken place, how much depreciation would have allowed? Only that much depreciation should be allocated. I don't think they have given, and such depreciation shall be apportioned between them proportionate to use. Proportionate to use means up to which company they are using till that date to that company, after that to the successor company. Are you guys getting?
Yes, sir.
X Limited has a block of assets, plant and machinery. Block of machinery carrying 15% depreciation. WDV as on 1st April 21 is 75 lakhs. Just I will be keep plotting. Eh, 75 lakhs, right? Opening WDV 75 lakhs. This one you can make it as 21. Wherever there is 22, 23. 21 make it as 22, 22 make it as 23. Okay. It purchased subsequently on 1st December 21 another machinery for rupees 25 lakhs. When it has been purchased 1st December 22, is it less than 180 days or more than 180 days?
Less than 180 days.
Less than 180 days. How much is the value? 25 lakhs. Now it became 1 crore. Okay. Is there any sale? No. And put to use on the same date, on this date. X Limited was amalgamated with Y Limited effective 1st February 22. 1st February 22. That means this is April, May, June, July, August, September, October, November, December, January. Okay. From 1st February, no. That means these two belongs to XY Limited. Up to this X Limited. How many days? 306 days. This one is how much? 59 days. Do you guys agree with me? When it became merged 1st February 23, that means February full 23 February means 28 days, 31 days March. This is February, March. Is it correct?
Yes, sir.
Okay. Now whatever the depreciation is there, it has to be allocated based on the number of days between the two. Okay. First we calculate the depreciation. What is the rate of depreciation? Nothing is given, general rate you have to take. Okay. Since it is less than 180 days, first you calculate depreciation at 15% for 25 lakhs. How much it comes? 25 lakhs into 15% into 50%, how much? Calculate.
So 1,87,500.
187,500 and on 75 lakhs is how much? 15% direct. Don't multiply it with 50%. Direct calculate 17%.
11 lakh 25,000.
11 lakh 25,000. What is the total depreciation? 13 lakh 12,500. This one has to be allocated to these companies based on number of days. This multiplied by this divided by 365. It should not exceed 13,12,500. 13,12,500. Both are same, one and the same. Correct?
$11,342.
Add these two. 943, 151, 96,074. 943, 151, 96,074. How it is coming? 59 days. It is 62 days. Okay. One second. I got it. Why? There is a difference. Less than 180 days is there? No. Less than 180 days. In that 180 days, you need to bifurcate. Extremely sorry. This 11,25,000. Give me a second. For this 11 lakh, I215. $943, 151. 943, 151. Okay. This is above 180 days. Less than 180 days. Less than 180 days. Out of this, he has used 59 days. When you have purchased the asset, when you have purchased the asset, 1st December. From 1st December to 31st January, how many days? 1st December to 31st January means these two. 62 days will come now.
Yes,
1st
sir.
December. Okay. That is 62 days for the addition. That means divided by 62. From 1st December to 31st March, how many days? 1st December to 31st March, how many days?
120, sir.
121 days. Right? $121, right?
Yes, sir.
December, January, February, March. 121 days. Divide that depreciation by 121 days multiplied by number of days of usage. This X Limited has used 62 days for that period from 1st December to 31st January. For XY Limited, 51 days. Limited. This is the total depreciation multiplied by 121, divided by 121 multiplied by 59, 91,425. If you add this one with this one, it comes to 273, 274. Okay. Total comes to 13 lakh 12,500, 13 lakh 12,500. Alice, for this one, 1 lakh 3,000, 10 lakh 39,225, 10 lakh 39,225 for X Limited, depending on the usage. You got it? How to calculate in case of merger? Demerger means what? What is merger? I think you guys are studying company law as well. Merger means what? In amalgamation, are you going to study amalgamation, internal reconstruction, external reconstruction chapter? Merger means what? Two or more companies joining together. Demerger means of the same company, one unit is getting separated. Like Tata, they have so many things now in Tata. Tanishq, Tata's gold store, that has been demerged recently. I think recently in the sense 4-5 years back, I think. It has demerged from Tata Group. Okay, understood this one? How to calculate depreciation in case of demerger, amalgamation. You guys can solve it on your own, right? Okay, 1st February, it got merged. From opening WDV, from year to year, you need to calculate depreciation, and it belongs to X Limited. From year to year, you calculate depreciation based on the number of days. That will go to XY Limited. There is an addition as on 1st December. From year to year, you need to calculate the number of days. This portion will go to X Limited. This portion of the addition will go to XY Limited. Right? Understood? On what basis to be divided? Based on the number of days of usage. Okay? Can you calculate the depreciation for this problem?
ஃபோன் பண்ணுங்க கல்ல அவங்கள கூட்டாங்க நீ
Calculate and tell the answers.
1 lakh, sir. I think the cursor is standing there.
1 lakh.
Thank you.
How many to have 5 columns? You can see here. Here I have given the rate. If it is not given, you should be in a position to take the correct rate based on your study. How you prepare, how you keep it in mind, it is up to you. Some people will just see the text and they will remember. For few people they have to write. Depending on how you guys will keep it in mind, please do that according to your convenience. Before you guys start, how many blocks are there? 5. Okay. Of these two, which one is the relevant? This becomes relevant. This date becomes relevant only when the asset is purchased prior to previous year. Prior to previous year means before 22-23 previous year. If any asset has been purchased and put to use in this date, put to use in this current year, even though it has been put to use for less than 180 days, you have to consider it as put to use for more than 180 days. Yesterday I told. You have to be very careful in that point. Apart from that, there is no such challenges in calculating depreciation. Okay, now tell me here. This addition, is it more than 180 or less than 180? This one, building, more than 180 or less than 180?
More than 180.
How?
28 June 22. That is before 3rd October 22.
10th November?
Less than 180.
See here, 1st May. You should not consider this date. Always you should consider put to use. Okay? Less than 180. This one.
More.
This one.
More.
This one.
Less than. Less than.
This one.
Less than.
This one.
Less than.
Less than. Now take opening balance. Addition more than 180, less than 180, 2 rows. Only one building has more than 180. All are less than 180. Take these figures under less than 180. Total. Calculate depreciation. How to calculate depreciation? First you have to compare the closing balance with the less than 180, because in this case closing balance for WDB will always be more because there is no sale. Hence calculate depreciation for this at the prescribed rate multiplied by 50% for this. And for building 2 lakh plus 1 lakh, 3 lakhs at 10% calculate for whole year depreciation. Very easy question.
Yeah.
4 lakh 20. Okay, easy, right? Are you guys getting? Shall I proceed? You guys need time? Okay, 5 lakhs, 3 lakh, 57 lakhs, just adding both opening and addition. If you add, you have to get this much. Have you got?
Yes, sir. Yes, sir.
Calculate depreciation for less than whatever is the value multiplied by the rate into 50% for less than, and for more than WDV purpose, WDV for depreciation purpose minus less than multiplied by rate. In this question there is nothing. Depreciation comes to this much. Okay. Shall I continue? Guys, you have to be little quick. See, no need to put columns and all. Just understand the logic. How to calculate. That is more important. I will leave for you to read this one. What is actual cost? Actual cost means whatever you are taking this addition, whatever you are calculating the value for the addition, that is the actual cost. They have told how to calculate actual cost. Okay, I will just take one or two example. Please answer me. Okay, now you have one building. Now you have one building. For your residence. You have one